G'day guys, welcome to Pumped On Properties February market update for 2025. Now this year has started with a bit of a bang with so much variety in the Australian market. Some markets are going absolutely ballistic, others are coming down at the moment. Some people are talking about interest rates dropping, others are saying it might not happen this year. So hopefully by the end of this market update, you've got your finger on the pulse, some key performance indicators of what's going on now, and you can move forward with confidence in 25.
Now, first things first, let's check out the changes in property prices throughout the capital cities over the previous month. In Sydney, Melbourne, and Canberra, we saw a slight drop in property prices, nothing over 1% in any of those three markets, so just a mild drop over the previous month, whereas Brisbane, Perth, and Adelaide continue to move in a positive direction.
Now, what's interesting is we've seen that sleeper up there in Darwin start to move by over half of 1%. Woo!
It's so funny to say that because, I remember back in December of 2023, me and Crystal sat down and we looked at the property market predictions for 2024. And we were saying, over 12 months ago that Darwin's just primed for it. It's got to start moving. And we've seen it over the last couple of months now.
You know, what I like about this market is it's got some of the highest incomes in Australia per household and some of the lowest house prices. And the 10-year averages are horrible. In fact, most suburbs have actually done less than 3% a year for the last 10 years. So again, we're not going out to rush into Darwin at the moment, but it could look good moving forward.
Now, if we look at the annual capital growth rates, Darwin is really only just turning around, up 0.9% over the previous 12 months. And it was a similar story in Sydney, in Canberra, and Hobart last year, all of those markets sitting relatively flat. Now, Melbourne was the worst affected property market over the previous 12 months. It's gone down by 3.3%, which sort of puts Melbourne in a position where it's really underperformed the national average for the last 6 years in a row now. Now, you've been hearing it every single month, and you're going to hear it again this month. Brisbane, Perth, and Adelaide being the absolute front runners in Australia right now, all seeing double-digit price growth over the past 12 months.
Now, you mentioned something off camera this morning, which was around the quarterly price growth in Brisbane, Adelaide, and Perth. Where are things at there?
Yeah, it's been interesting because obviously Perth's been a massive front runner. There's been a lot of demand in that market. But over the previous quarter, it's really started to slow down quite considerably to the extent where Brisbane and Adelaide have both had a higher quarterly growth rate compared to Perth. So we'll see if this trend continues.
Now, in terms of the monthly vacancy rates across Australia, in February, Brisbane, Perth, Adelaide, and Hobart looked phenomenal, with three of those markets having vacancy rates sitting below 1%, which is chronically undersupplied. What was interesting to see is that three of the worst performing markets actually also have the higher vacancy rates in Sydney, Canberra, and Melbourne. Now, a couple of years ago, I stumbled across some incredible information from CBA and SQM. And basically what I looked at was the capital city average annual growth rates versus the vacancy rates across Australia's capital cities. And what we found is that markets with low vacancy rates generally get stronger average annual capital growth rates than markets with higher rates. Now, that isn't always the case and things are constantly changing, but it is interesting to see those markets outside of Hobart with extremely low vacancy rates at the moment. The likes of Brisbane, Perth, and Adelaide are the ones kicking ass right now.
Now, as we transition and look into auction clearance rates, they are sitting quite low at the moment, with every single city in Australia recording a auction clearance rate below 70%. Now, seasonally, we see this every single year. Towards the back end of the year in November, December, and then into the new year in January and February, you do see those auction clearance rates a little bit lower compared to other times of the year because people are on holidays, enjoying their time, not worrying about going to an auction.
Now, in terms of consumer confidence this month, in terms of the way that we're feeling as Australians about what's going on in the market, and that's generally really good or really bad, depending on the sentiment at the time. It dropped a little bit, but if we're actually being real, it was like less than 1%, and it's not a big deal. And I think things very quickly are going to turn around, and I wouldn't be surprised if in the next 3 to 6 months, we see that pop back over the 100 mark.
The unemployment rate remained at 4% over the previous month, which is really solid to see that inflation numbers are coming down, even though we're being able to hold those jobs steady. And if we were to take a look at the lending rates, it hasn't really changed too much in recent months, still sitting at about 62% of owner occupiers to 38% investors. Slightly higher number of investors getting into the market at the moment, which is no surprise to me because when you see property prices being so high in most of the cities where the average Australian lives, they choose to go and spend their money elsewhere and invest because they may not be able to afford to buy their home in their local city.
Now, the $1 million question, and the thing that's been upsetting so many of us as investors and homeowners in Australia for almost the last 2 years, is this constant conversation in the media and online about interest rates. Now, while me and Simon don't have a crystal ball and the RBA is going to do whatever they're going to do, from all of the conversations we've been having with clients that work at the banks, from mortgage brokers in the industry, and from all of the media coverage coming out from the top 4 or 5 banks in Oz, it looks like rates may drop very, very early this year. And according to some of our clients working in the banks, we might even see a rate drop as big as 1% by the end of the year, which would be phenomenal. Like, I would love to see my interest rates back in the 5%.
And what I love most about that is CoreLogic recently came out with an article where they were looking at the influence of interest rates dropping versus property prices. And what that said is when the cash rate drops by a full percentage point, you see the national average in property prices go up by about 6.1%, which is a little bit different to data we've seen in the past. But I trust CoreLogic more than anybody else because they've got the real numbers, which is really exciting to know that these markets like Canberra and Melbourne and Hobart and Darwin that have been underperforming in recent years, they may start to see some reprieve with people having access to more money with the drop in the interest rate.
You know, I love that so much because I think one of the things that we undervalue about what this rate drop's going to do, not only does it give us all a bit of a break from these crazy rates that we've been handling recently and crushing our household budgets, but on top of that, it actually increases our serviceability. And more importantly, it gets the show back on the road and people start feeling way, way, way better. And when people start feeling better, we start to see prices going up. And that completely leads to the next thing, which is momentum, creating momentum. So there's such a bigger picture in here than saving a few bucks on your home loan in terms of what it's going to do for the Australian economy.
Now, if we start talking about the listings around the country at the moment, we have seen the new listings increase quite rapidly around the country, which is really nice to see because we have had lower levels of supply compared to previous years. And this may also soften some of the capital growth rates that you see in markets like Perth and Adelaide, where those listing numbers have increased massively. Now, if we look at distressed listings, it was a bit of a different story depending on the city that you were looking at over the previous month. But on average, it only increased by about 1.6%, which isn't very much. It's not really going to have much of an impact. But if we look at the distressed listings from November of 2023 and compare that to November of 2024, where we're getting this data from, distressed listings have actually decreased by 0.4%. So year over year, even with those higher interest rates, people haven't been forced to sell their home. Now, one thing I did notice in the data is that there was 2 markets in the country where the distressed listings had increased over the last month and increased over the previous year quite considerably, and that was in Canberra and in Perth as well. So it's really interesting to start to see this data change course of direction for Perth with, you know, lots of listings coming up, distressed listings coming up, monthly capital growth rates coming down. We might start to be seeing a bit of a change of the guard or a change of scenery over there in Perth. So let's see what the months ahead have in store for Perth.
You know, what I've noticed personally as an investor looking at this sort of stuff for the last 15 years myself is generally when a market, and we've seen this in Sydney, we've seen it in Melbourne, we've seen it in Canberra, we've seen it in Hobart, when they go through a very, very, very sharp run, where in 5 years property prices almost double like we've seen in Perth, it normally hits a point and people start paying ridiculous prices at the very top, 50, 100, 200K above asking price. And then once the heat starts washing out of the market, there's a natural pullback, which we saw in Hobart a couple of years ago. We saw in Sydney about 5 or 6 years ago. We've seen that in Melbourne as well, and now we're starting to see in Perth. And it's just one of those things where people can't help themselves when things are going ballistic. Everyone wants a bit of the pie, but then at some point the tide starts draining a little bit, and it would be very natural for a market that's gone up by 100% to come down 10, even up to 20% on the retracement, just as prices normalize and demand disappears a little bit. You know, that said, it could just be a monthly trend, because when we look at the predictions according to SQM Research and CoreLogic for Perth in 2025 and 2026, they are absolutely phenomenal, with potential for price growth of somewhere between 6 up to almost 19%, depending on the data and which scenario we move forward to with interest rates and population growth. So big things still ahead for Perth, but we'll sort of keep a close eye on that moving forward.
Now, to hit you guys with a little bit of positive news, over the previous month, I was reading an article from CoreLogic where they interviewed a bunch of industry professionals in the real estate space about where they see property markets going this year and how much confidence they have in those property markets. Now, the leader of all other states, and the leader by a long shot, was actually Brisbane. And the main reason for this is the real disconnect between supply and demand in Brisbane at the moment. Once you factor in the population growth that's being experienced both internationally and locally here in Australia, obviously there's nowhere near enough properties being built, there's nowhere near enough properties being sold, and there's nowhere near enough properties being rented, which is causing property prices to continue to rise and rents continuing to rise in the Brisbane market. So I was really happy to see that.
In terms of 2025, I think Simon and I are both extremely excited about the market. It's going to be one of those years that good things may happen, bad things may happen, like every single year in the property market. But if you're applying the fundamentals that we talk about in our other videos, like buying close to the capital cities or the major regional markets, buying as close to the city as you can or on the beach, buying houses with great pieces of land or nice big townhouses, buying the quiet streets that you want to raise your family or your grandparents lived when you were growing up. If you continue to follow those sorts of fundamentals and then you look at the likes of Brisbane and Melbourne maybe, there could be incredible gains over the next 10, 15, 20 years ahead. So we're super bullish about the market this year. We actually think it could end up very, very well, maybe even better than some of these forecasts, but it all comes down to where interest rates start to land in the next few months. G'day guys, my name's Ben and I'm the director here at Pumped on Property, and I just want to say a massive thank you for watching our content today. Now, if you're thinking about buying an investment property in the next 3 to 12 months, then the team and I would love to offer you a one-on-one strategy session. In that session, we can talk about exactly where you are right now, where you'd like to be longer term, and we can deeply educate you on the Australian market. And then you can take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each week. To book your session, all you have to do is go to www.pumpedonproperty.com and click that book your free strategy session button. But either way, we wish you all the best on your journey as an investor to financial freedom.